Welcome back to Memes to Markets. In today's episode, we're going to be breaking down what a real high probability meme coin setup actually looks like. The kind of structure, liquidity, and market conditions that have historically produced the 50x, 100x, and even higher moves in this space. We're not here to chase random pumps or gamble on hype. We're here to understand the anatomy of explosive moves, where smart money positions early, how market structure shifts, and what technical signals tend to appear before these runs begin. I'll be walking you through the key ingredients, from narrative and volume expansion to liquidity zones, Fibonacci equilibrium, and the specific chart patterns that often precede parabolic price action in meme coins. So if you're serious about finding asymmetric opportunities, learning how to spot them early, and avoiding the traps that cause most traders to round trip their gains, stay locked in, because this episode is all about identifying the conditions that can lead to the next 100x meme coin move. The first coin we are going to look at today is shitcoin. Shitcoin is only 6 days old, and we're going to analyze it on the 15-minute chart to get a clear view of the short-term structure and momentum. The first thing I want to do is apply the Fibonacci retracement from the absolute low to the absolute high and see how price has interacted with these levels over the life of the token so far. What we can see is that price has now retraced into the 0.618 Fibonacci level. This is a critical area of support, and for this token to continue higher, we need to see price hold the 0.618 Fib level and start to build strength from this zone. Next, I want to add the fixed range volume profile to the chart. When we do this, we can see that price previously interacted with the point of control, then broke down from it. We also see that the 0.5 Fibonacci level, which is the equilibrium of the entire move, initially acted as support, but has now flipped into resistance. This tells us that at the moment, sellers are still in control around the most important balance level of the range. This is not ideal for immediate continuation, but it does not invalidate the setup. What I want to see next is price continue to hold the 0.618 level, reclaim the value area low from the volume profile, and then start accepting above it. At the same time, I want to see price reclaim the 0.5 Fibonacci and the point of control. And most importantly, hold them as support, not just wick through them. In addition to this, I want to see an expansion in volume on the volume histogram, and I also want to see the on-balance volume, the OBV, start trending higher and making higher lows. This would indicate that real accumulation is taking place rather than just a technical bounce. If we can see the blue pocket hold, the value area low reclaimed, the 0.5 Fibonacci and the point of control flip back into support, and volume and OBV confirming strength, then this token has the structural conditions in place for a strong continuation move and potentially the kind of explosive upside that we look for in early stage meme coin setups. The next token we are looking at is FU. FU is only 6 hours old, and since launch, it has already reached a market capitalization of nearly $750,000, which tells us there is strong early interest and participation. We are on the 5-minute chart to study the short-term structure and momentum. The first thing I want to do is apply the Fibonacci retracement from the absolute low to the absolute high of the move so far. What we can see is that price initially sold off and found support at the 0.886 Fibonacci level. From there, it pushed higher and moved up into the 0.5 Fibonacci level, also known as the equilibrium of the entire range, where it found resistance and was rejected. Price has since retraced back down into the Fibonacci blue pocket, the 0.75 to 0.786 zone. This sequence perfectly demonstrates how powerful the 0.5 equilibrium level is in Memecoin trading. When price reaches this level and cannot reclaim it, it often acts as a decision point, either leading to continuation higher if reclaimed as support, or continuation lower if it holds as resistance. Next, I want to add the fixed range volume profile across the entire life of the token. When we do this, we can clearly see that price has been interacting with the point of control as both support and resistance since launch. This tells us that this level represents fair value for the majority of market participants so far. Right now, price is finding support directly on the point of control, which is a constructive sign. What I want to see is price hold this level, begin to build a base, and then attempt to reclaim the 0.5 Fibonacci level and the point of control together as support. At the same time, I want to see confirmation from volume. On the volume histogram, we want to see increasing participation, and on the on-balance volume, the OBV, we want to see higher lows and continued upward movement, showing that accumulation is taking place rather than distribution. If we can see the blue pocket hold, the point of control remain as support, and price reclaim the 0.5 equilibrium level with expanding volume and rising OBV, then FU has the structural conditions in place for a strong continuation move and potentially very significant upside from these early levels. The next token we are looking at is Whale Guru. Whale Guru is around 2 days old, and we are analysing it on the 15-minute chart to get a clearer view of the developing market structure and trading history. The first thing I want to do is apply the Fibonacci retracement from the absolute low to the absolute high of the move so far. What we can see is that price initially pushed into the 0.5 Fibonacci level, the equilibrium of the range, but failed to hold it. That level was then flipped into resistance, and price continued to move lower. From there, price found temporary support in the Fibonacci blue pocket, the 0.75 to 0.786 zone, before retracing further down to the 0.886 Fibonacci level. At the moment, we can see price actively interacting with this 0.886 level, flipping it from a support to resistance and back again. This tells us that this is a key decision zone where buyers and sellers are currently battling for control. Next, I want to add the fixed range volume profile across the entire life of the token. What immediately stands out is that both the point of control and the value area low of the whole range are aligning almost perfectly with the current price region. This means that the area where the most volume has traded and where value is considered fair by the market is sitting right at this support zone. This creates a strong confluence. For Whale Guru to have a bullish continuation, we need to see price hold the value area low and the point of control, successfully reclaim the 0.886 Fibonacci level, and begin to accept above it as support. At the same time, we want confirmation from volume. On the volume histogram, we need to see participation increase, and on the on-balance volume, the OBV, we want to see higher lows and upward continuation, signaling that real accumulation is taking place. If these conditions are met, The next objective would be for price to work its way back toward the 0.5 Fibonacci equilibrium level, reclaim it, and hold it as support for further continuation to the upside. However, if price fails to hold the value area low, loses the point of control, and cannot reclaim the 0.886 Fibonacci as support, then the structure remains weak, and the probability of further downside increases significantly. In that case, the outlook for Whale Guru would remain bearish until a clear base and market structure shift is established. The next token on our list is Entropy. Entropy is nearly 24 hours old and has already reached a market capitalization of around $5 million, which tells us that it has attracted a significant amount of attention and liquidity very early in its life. The first thing I want to do is apply the Fibonacci retracement from the absolute low to the absolute high. What I want you to focus on is how price has behaved since putting in its all-time high around the $5 million market cap region. After that high, price retraced and broke below the 0.5 Fibonacci level, the equilibrium of the entire move, but it found very clean support in the Fibonacci blue pocket, the 0.75 to 0.786 zone. From there, buyers stepped in and defended this area strongly, pushing price back up toward the 0.5 level once again. When price reached the 0.5 equilibrium, it was rejected, showing that this level is currently acting as resistance. Since that rejection, price has retraced and is now finding support around the 0.618 Fibonacci level, which is another important reaction zone within the range. Next, I want to add the fixed range volume profile across the full life of the token. What we can see is that price is currently interacting with the point of control, which represents the level where the most trading activity has taken place and where the market currently sees fair value. If we look slightly lower, we can also see that price has successfully reclaimed the value area low of the range and is holding above it. This is a constructive sign as it shows acceptance back into value after the previous sell-off. What I want to see next for Entropy is continued strength in participation. On the volume histogram, I want to see expansion, and on the on-balance volume, the OBV, I want to see higher lows and a continued upward slope, indicating real accumulation rather than a weak bounce. If price can hold above the value area low, reclaim the point of control, and then push back above the 0.5 Fibonacci equilibrium level and hold it as support, this would open the door for continuation to the upside and potentially a new impulsive leg higher. However, if price fails to hold these levels and begins to rotate back down into the Fibonacci blue pocket, it would suggest that momentum is weakening and that buyers are losing control. In that scenario, the probability would shift toward further downside and a deeper consolidation phase before any meaningful continuation could occur. To wrap things up, what we've seen across these setups today is the importance of structure, liquidity, and equilibrium when it comes to identifying high potential meme coin opportunities. Whether it's the Fibonacci blue pocket acting as a launch zone, the 0.5 equilibrium level acting as the key decision point, or the point of control and value area low showing where real acceptance is taking place, the message is clear. Explosive moves do not come from randomness. They come from accumulation, structure, and confirmation. Remember, the goal is not to chase pumps, but to position around levels where risk is defined and upside is asymmetric. Patience, discipline, and proper execution are what separate traders who catch these moves from those who round trip them. If you want to trade these setups with the same tools we use on the channel, make sure to check out our affiliate links in the description. We recommend Axiom for Memecoin and Solana trading, and TradingView for all your crypto charting and technical analysis needs. By signing up through our links, you can access discounted trading fees and help support the Memes to Markets community at the same time. As always, trade smart, manage your risk, and stay focused on structure, not hype. I'll see you in the next episode of Memes to Markets.